Hey, what is up? It is Tuesday, February 13th, and it is day 4 of the goal to double my account by the end of the year. And so do it on the days that there have been some trades that have taken place that either closed or ones I've opened up. And the two trades that I showed from day one a couple days ago, those just got fulfilled today. So I want to talk about those plus a new trade I'm in. So what happened was starting out here for the S&P 500, that was one of them we were in. So what happened? Get rid of that. What happened was we'll get rid of that and that. It's an ABCD trade right here. See, there's A, B, C, D. Price closed below the blue line, which initially would have put the target down here at the white line, but that didn't happen. So get that. There hit 1.146 as well. Plus it closed below it. So what we do is we draw that back up. And when price hit the 23.6, the exit was the 1.146. That didn't happen. Then when price hit the 50, then we go all the way to wherever the previous low or high, if you're going up, low of the move was, which is all the way down here. For the close of it, did not hit it. Came somewhat close, but not hit, and then just started going the other way. I got in whip here at the 1.414 because that's one of the goals I'm working on this year is just getting in at the extreme ones, and this is when it hits the 1.146, then the price, you take it down to the 23.6 right here, and you don't move it anymore right there. I put the 61.8 Fibonacci retracement level on there. I'm not sure if I'm going to use it or not, but just wanted to see what some things look like. But anyways, that is where the exit stays, no matter how much higher it goes up. But as you can see for here, normally when price hits the 261.8 Fibonacci extension level the other way, that tends to be backstop and then it'll reverse. But this time it did not. We had a fake breakout higher. It did go a little bit higher than it, more than I would like. You can see it was post long, post long, post long. But we got a fake breakout over here. Got a whole bunch more longs in right over here for it. So it faked it out. Didn't fake me out, fortunately. Stayed in there. And then by the end of the day, we came down. We're past the lows yesterday. And then today, when they had the reports come out, some manufacturing reports and stuff like that, the market just totally, here's where it came out right here, was 7:30 Central Standard Time. You see that one big, huge 15-minute bar went and took it out down here at the 23.6. I'll just draw this box to show the low of it was the low of this box was the target we were looking for right down there. So it came out, took that out, and so that was a really nice trade right there. And it also, one thing that's interesting to notice is went all the way down to the other end of the original exit level for it. So really interesting to notice. But anyways, so that trade is done for the S&P 500. Now just looking for other ones to take. Unfortunately, there aren't any right now for it. But it's good to see that we had this big blowout candle right here. I like seeing extreme moves because it leads to good trades. And today, as of right now, is going to be a big time blowout trade. You can see from using yesterday's previous highs and lows, the extension low for today. It was on there for a while until the news came out about, I don't know, CCI or PMI, some economic report. Blew it all out really bad for the market, and unless it gets a big run up here today, it's going to be definitely a huge blowout day today, but hopefully that sets us up for some nice trades here in the future. Let's see this one real quick. Let's see if that one, yeah, that one unfortunately went down and hit it for that one for the ABCD trade right there. So yeah, nothing going on right there for the S&P 500. I was looking at seeing if there's going to be some red semaphore trades because we have a low, high, higher high. But we need this one to go all the way, break this one to be a lower low to make that an expanding triangle trade. So let's go over here to Nasdaq. This is the other trade I was in. And this one was the inside pitchfork trade. And so what we have, there's points 1, 2, and then we have points 3 and 4. You can see points 3 and 4 are within points 1 and 2. So when that happens, we put the inside pitchfork on, and the levels I have is 1.5 and 5. So then whichever way it breaks out or closes below, either it closes below or above first, that's the direction we're going to go. So it closed below it right there. So that was the original entry point. The original exit was this, the red line down here. That did not happen. So just like the other one, we go and put the Fibonacci levels on it. Right there to right there, from the previous high of the move to where the low was. And entry was right here, but you can see the low is right there. So that's why we have that. So hit the 23.6, retracing back up there, did not hit the 1.146, went up there, hit the 50, and then did not go back down and hit the low of the move right there. Price kept it going up, hit the 1.146. I got in right there, as you can see, was at 17,866.75. And then price kept going up. This time for this one, it acted more in line of what normally happens, where price gets around the, if it is going to go the extreme way, the 261.8 extension level, which it did. It came right close to taking off of it, didn't quite hit it yesterday, and then kind of like the SP 500 sold off once it got to that high point yesterday, which is actually from yesterday, was the extension high of the day. So hit off of that, and ever since then it's been in free fall down here since. And you can see right here was the exit, the bottom of this box, the 23.6 level, because once price hits the 1.146, that's the exit we're looking for. So we can go ahead and take the inside pitchfork off. So the bottom of that box, and as you can see, when I came back from this morning running some errands at, what time was that? 8 o'clock. Price had come down and got me out right here. I always have my exit slightly either above or below the exit. I never leave it at the hard stop, because sometimes we come close to getting hit and not quite hit it, but good enough for government work to be close enough. But came down there, hit it for a really, really nice gain. I'm proud of myself for staying in it for the full amount. So great trade right there. And then the next time I have a video, I'll show my the report that comes that AMP sends every day about the closed trades and everything like that. But I'll go ahead and show you. I went and took a screenshot of what my account currently looks like. Here it is right here. Make sure it's not covered up on the screen. All right, good. So I think last time I showed it was around 3,900. So right now at 4631.58. Profit and loss today at $553. Some money will get taken out of that from for whatever the costs are, for a couple dollars or $1 or so for opening, closing the orders for it. So we'll go down slightly. And then OT is what I currently have, and that's the Dow Jones trade that I'll talk about here in just a second. But yeah, so far off to a great start. Goals by the end of the year to get to $8,000. So those two trades right there at 553 were well over 10% of my account's gain that I was looking for it. So great way to start it off here for February. So off to a really good start. So let's go over, let me save that. So anyway, so this is off, so I can take all this stuff off right now. I do want to leave that on there because I like leaving the, when I have a trade, one that goes like an extreme way the other way, I like leaving it on there so I can go back and review it, see what it looks like when price went back the extreme way. If it just hit, like if it goes down, hits the first target or even the second, third target, I'll just leave it on. I won't leave it on, but when it goes to the extreme level and hits at least the 1.146, I like leaving them on. But right now, we really kind of like SP 500 for the Nasdaq. There's not. I'll take that back. Let's see what this looks like. So we do have an. Do we have any more red ones? No, we don't. Okay. So we have, there's a red, and then a red. So as you can see, we have, there's the 0.1, which is low, 0.2 high, 0.3 lower low, 0.4 higher high. So when that happens, we have an expanding triangle trade. So let's see what that looks like in here. Right there, it's right there. And then the way I remind myself that it's in it, that wasn't accurate, that's right. So I like putting, it's a 5-wave L8 move, but I just use it for the 4 points to remind myself that this is the expanding triangle trade. And let's go make this accurate right over here. Go ahead and take the highs and lows off of the day. So there we go. So what we're looking for, so again, you see there's 0.1 low, 0.2 high, 0.3 lower low, and 0.4 higher high. So the first entry you can look at getting in is when price closes below this yellow line right here. So it wasn't until that candle right there. And the exit we're looking for originally when it does that is all the way down here to this green line right here. You know, the hard exit is yellow line, but I have seen it before hit the green one and then it reverses out the other way. So that's good enough. So we just leave it out like that. So that is currently live trade, but we have those rules where when we get the retracement back, because what we're looking for when like this hits it is for just like a run down to go there and hit it. And then when it doesn't do that, it starts retracing back up. So let's see here. It hits a 23.6. There you go right there. Then the X we're looking for right now is the 1.146 right there. I'll just go ahead and draw like a target box for it. So top of that box right there, that's going to be the X we're looking for, 1.146. If price goes up and hits the 50, then the exit we're looking for is going to be kind of like the bottom of where the move closed right here, which would be around like rightish here-ish. You know, this is probably good enough for it, something like that. And then if price goes up and hits the 1.146 the other way, which is where I'd be looking at getting in, I probably would go 1.4 and 4, just hoping it goes up a little bit higher to get me in better. But when it does hit the 1.146, then the exit moves to the 23.6 level. So not looking at getting in this one anytime soon. You know, we'd have to get a run up here to at least 18,100, let's say 18,200, at least minimum for me to look to get in for it. So, you know, there's definitely a good chance, you know, this runs all the way back down here, hits this level or hits the 50 and then goes back down and hits that level right there. But, you know, that's you miss out on some doing it that way. But it's definitely, I take less trades doing this, but the profit margins are way greater. And on the times that I'm not aggressive and getting into it, I don't have to worry about getting in extra contracts and things like that. So it's just about being patient. So that is live trade right there for it, but I'm not looking at getting in unless, like I said, price continues to run up here and it hits about 18,200. All right, so the trade I am in right now here is the Dow Jones trade right here. And I'll show you what this looks like. So starting off, here is this ABCD trade. So actually I can go ahead and put that on there. So there's the A, B, C, D right there. So when the price, let's take this down. So when we get it, we put the shift pitchfork on points A, B, and C. And that's the blue line. You see it closed above the blue line, plus hit the 1.46. So that's the first entry into it right there. We could have got in. The exit is up here, this white line. It did come pretty close to hitting it. It's 16, and then all the way up there is 37. But it's still over 20 ticks away from it. So it's not close enough for me to consider it to be done. So with that being said, we just keep drawing this up until the 23.6 gets hit. And there we go. It got hit right there. So that would have put the exit, you know, back to the 1.146 up here. That didn't happen. Price came down, hit the 50. And so when that happens, we look for price come back up here to kind of like the close of the high. And obviously that didn't happen. And then today we just had that huge move down. You can see it's bouncing off the 61.8 as well. I don't have anything going on with the 61.8. I just was starting to see if maybe I want to use the 61.8 rather than the 50%, since that's a true Fibonacci retracement level. The 50% is not. It's just an area where a lot of people utilize it for you know, movement for a lot of buy orders and sell orders on there. So it's kind of like, even though it's not a Fibonacci number, tons of people use it for trading purposes. But anyways, that's why I want to put 61.8 to see if that one could be a better entry level than the 54. But anyways. And again, here we go today. You know, we had the reports come out, the economic news, huge move down right here. So I had my entry right here was at 38,502, so just above the 1.44. Even though the entry is 1.146, I figured try to get in a little bit better. You can see there was a little bit of around here where the bottom of the inside or the shift pitchfork was right here. And the levels I use for the shift pitchfork are 1.146 and 3.618. But as you can see, price has been just continuing to move down. And I have my exit $200 just below the 23.6. I'll go ahead and put the box up here. So top of that box is 23.6 level for it, Fibonacci retracement just from point A to point D. Then I also have another buy order down here because the margins for the Dow Jones It's higher than the Russell in crude oil, but less than the SP 500 and the Nasdaq. And since I'm not in, especially the Nasdaq trade, I can afford to get in at another entry down here. So if it does go down, it hits this level down here. Awesome. As you can see, you remember from the Nasdaq up here, it came really close to it. Didn't quite hit it, but for the SP 500, went quite far below it. So I just leave it, around this level. I'll maybe move it up just slightly, just curious. If it comes down here, about right there, I'd love to get in. And if it doesn't hit right on it, then that would stink because, that'd be another potential $400 for it right there. But that is what we're looking for the Dow Jones. So from there, I'd still have, because I think the margins is like 950 per. So I still have enough money to get in at another contract from another one. But there's still one I'll be looking at is, I don't know if I'd get in here at the Nasdaq though, because I think that'd be pushing it pretty close. I'd have it a little. It'd be close. I don't know. Nasdaq would be close. SP 500, I'd have enough to get in one, but there's nothing like SP 500. This one, here's the Russell 2000. This is another one that's currently live as well. It's just a expanding triangle. See, there's 1, 2, lower, low, higher, high. I think we already covered this. I can't remember. Yeah, we already covered this. But anyways, I buy one. Look to get into if it goes back to 2074. Current X is down here in 1953. And then for oil, let's see here. Oil, where are you? Oil, load up. There's a potential one right here. What we're waiting on is this is going to be a inside pitchfork trade. You see, there's points 1, there's point 2, there's point 3 and point 4. So there's point 2, 3, 4. We have right here. Put the inside pitchfork on. So we're just waiting to see which way price breaks out. If it breaks above the teal line, then the original target is up here at the red line. But if it breaks out below the teal line down here, then the original target is going to be down here at the red line down there. So that's what we're looking for the put that on there to market. Yep, there we go, for the inside pitchfork. And that's really the only main move. Well, we do have another one forming right here. Let's see what this looks like. This is going to be an ABCD trade. So that one's currently live as well, but it hasn't had the retracement back. So that bar was the entry right here, but we put this at the top because that was the move. And then already hit the 23.6 already from it, hit the 1.146. So that trade is done. That one was kind of a real hard one to get in right there. Because there was the entry, but there was already the high, and it already come back down and hit the 23.6. So went up there and hit it. So that one is done. So we'll go ahead and take that one off right there. And it looks like we do have another potential ABCD trade. Yeah, we can do that one. See, A, B, C. To make it a BC, it has to at least retrace down to 23.6. And then put this on as the final. Okay, so we do have, this one is now live as well, because we can see price hit the 1.146, closed above it right there, so we're in. And then, I don't want that, I want this U. Let's go put U back there, take the Fibonacci one, so there's the entry. So the current exit we have for it is, we'll just draw a line, there's the entry, it's still going to be the white line, sloping up right there. But if price comes down, hit the 23.6, then we move the exit to the 1.146, which is going to be that orange line right there. But for me to get in that trade, we need to have a big move down here to about $75.11 for oil. I wouldn't really look to get in at the 50%, even though that exit would change it to about up here, which would be which would that be? $1.22, $1.20-ish. That'd be a real nice move. But thing is, if you get a big move against you right here, there's $1.80-ish at least going against you right there. So better be safe than sorry. Miss out on some trades, but you get in a lot better area, and the profit potential is a lot better. Just fewer trades, bigger profits. The goal is to just remain patient out there. So yeah, that's the trade I'm in right now. This one right here, this is going against me, but that's the way it goes sometimes. Have another one down here looking to get in right there. It's a new saying, bit of a share familiar. Okay, TIF's new demand, whatever. Stick inflation, keep Fed patient. So yeah, keeps on going down, hits this, looks getting right here, and the exits are going to be right up here-ish, something like that. 200. Well, it would change back down to this one down here for it. So pretty nice one. But anyways, that's the update for it. Day 4 on the looking to double my account from 4,000 a couple weeks ago when I started this, or maybe a week or so ago, until the end of the year, December 31st. If I hit it before then I'm just going to keep on going. And at the end of the year, then after you pay the taxes and everything for it, so what I'm trying to say is at the end of the year, I hit the 8,000. You pay whatever taxes you have to pay for it. I have to pay for it, and then I would take that money, keep on going, looking to double whatever the gross amount I had. End up with the year, so say I end up with like 9,000. Then next year I look to go to $18,000. But say at the end of this year, say do awesome, I hit $10,000. Just use a round number. Pay the taxes, and the goal will be $20,000. And then there will come a time when I will start taking some money out, just to either invest in other ways or buy some things, put some more money down the house payment, stuff like that, just because I have made some money before. But the mistake I made was I never took any out, because I just want to keep increasing, and didn't never want to take any out. But for the fruits of my labor, once I get to a certain point, I will start taking some money out, just have fun with it, or do stuff with it. But not there yet. Hopefully, here in the near future, double the account, then you can really start thinking about that. But anyways, take care. Next video I have will be when there's another update, depending on whenever I get in again with another. If the market continues to move down here for the Dow Jones, get in down there, I may do the video then. Or if I get in one of those other in one of those other trades, like here at the Russell or here at the oil or something like that. But until then, I'm not doing an everyday video just to recap the market, because those are boring. No one cares about those. So I'll just show the trades I'm in, the trades that closed, and so those will be the updates. So right now this is day 4 when I started on this. So next time I see you, there'll be some update. Either a trade is closed or I got in another trade as well. And of course, as always, give you the money update, whether it shows it from my trading platform here or through the AMP futures that it sends it. I didn't do the AMP futures document they send every day, just because I won't get it until like 11 p.m. 1 a.m. my time, and I want to do this video today for it. So anyways, talk to you later. Thanks. Bye.